Okay, guys, today we're going to take an analysis of Copart. I literally pulled this stock up like 10 minutes ago, and now I'm going to show you what I see. So, in the past 5 years, we're up 230%, definitely outpaced the S&P 500. This has been a very, very well-performing stock on the all-time chart, just straight up and to the right. It would be amazing if you would have bought this way back when, but yeah, we're here now, and we're going to do an analysis on this stock. So, Copart, they actually operate like an auction house kind of for cars and salvage titles. So like cars that get in accidents or floods or whatever, they put them in a lot and then they provide an auction for them. They also provide other services related to those vehicles. Their price to earnings ratio right now is 39, which is quite steep. So they better have some growth. They're also a $51 billion company, so pretty large at this point. Let's take a look at the financials here. In terms of their revenue growth is very solid, growing every single year. And even last year, they grew 10%. On a quarterly basis, they're growing 6% in the last quarter. So it's very, very solid growth for this company. On average, I mean, they're growing at a very, very steady clip, honestly, like probably like 12, 14, 15%, something like that, uh, each and every single year, which is amazing to see. And they've got great margins as well. They are diluting shareholders a little bit, probably just through stock-based compensation because it's just a tiny, tiny little bit. In terms of their balance sheet, let's take a look at that. Their balance sheet, their net debt is negative, so very, very solid balance sheet, negative 2.55 billion in net debts. Yeah, they actually operate much like a software business, so they don't actually own any of the cars. They just provide services with their auction house. In terms of cash flow, let's take a look at that. They are issuing some shares, so they raise money that way. And yeah, they don't pay any dividends right now, so they're basically focused on growth still, which is insane that they've grown so large and they're still focused on growth. So here we go. The return on invested capital is very high at like 22 to 28. So very, very good return on invested capital. Their gross margin is nice and it translates very well into their net margin. Their net margin being about 28 to like 32 or 35 one year. So very good net margins with high revenue growth. That's probably why they command such a high earnings multiple right now. Yeah, high valuation. In terms of, let's see. Okay, this is their website. So yeah, you can see the current bid here. So they basically operate auction houses. They've got a bunch of inventory. They also have different services that they have vehicle reports, I guess. It's something for brokers and inspectors. I took a look at this. They actually, yeah, see, you could see they make most of their money from service revenues. They also do make some money from vehicle sales, it looks like. So maybe if it's like a certain like really good car, they actually buy it and then resell it. But yeah, they make most of their money from service revenues, it looks like. And yeah, very solid growth in that. Yard operations, so yeah, they've got big yards to hold all the cars and cost of vehicle sales. So they made some money on their vehicle sales. Let's take a look what the analysts think. Analysts are expecting this and this for the revenue. I usually use the average in my model. And yeah, they're expecting 9% growth this year, 9% growth the year after that, and earnings per share growth as well. Fairly high earnings per share growth at like 12, 14%. Let's take a look at their short percentage, usually pretty important. Their short percentage is 1.82. That's not that high, like 5% is usually a red flag, but 1.82 isn't horrible. It's also not great. You'd like ideally you would want to see a short percentage of like 1% or lower. So 1.82, not too bad, but they're probably just shorting because the vehicle market's not really looking all that good right now, and this company has a very high valuation. So maybe they're betting to the downside because of that. Let's look at the DCF model here. So here's the model I made. I put the earnings estimate here, revenue estimate here, buybacks, they don't do any, net debt of negative 2.5 million and or billion, discount rate to 10% because I want a 10% return on all my stocks. Exit multiple 24 because I think that this company has a long runway for growth. They've got great margins. They operate kind of like a tech company. They probably have a good moat. You could probably even push this a little bit higher, maybe to like 27 or 28, just because this is such a high quality business. And in terms of growth, I have them growing at 10% with their earnings and then slowly fading down to 5%. In this case, they are overpriced. Their fair share price is at 37. They're currently trading at 53. And with the revenue margins model, they had profit margins of 32% last year. Probably expect that moving forward. You might be able to get this up higher to like 35% at some point, but right now we're just going to use 32%. In terms of growth, they're projecting 9% growth, and this company did like 13, 14% in the past 6 years. So maybe it would be better to have this growth more steady at 9%. But I just have their growth slowing just because this is already such a big company, and usually it becomes harder and harder to grow as you get larger. So that's why I have their growth slowing down to 5%. And in this case, they are overpriced at the moment. Their fair share price being $37 and their current price being 53. So I am currently staying away. Like I would love to add a position in this company, but they are like pretty overvalued at this point. So I would have to wait for their price to come down. Maybe some negative news comes out, maybe their growth rate slows, and then that would be a good point to get in because usually the share price declines quite a bit when stuff like that happens. So, yeah, that's what I think about the stock. Let me know what you guys think. Yeah, pretty good company, but yeah, make sure to hit that like button, and I'll see you in the next video.